Alright, so let's take a look at NIO. It's currently exploding right now, and well, you could argue exploding, but it's $18. It's up quite a bit from what it was. It was averaging around $13 before, and before that, it was $3. So it's hitting new highs. So is that good? Yes, but could it be investors and people trying to pump this up and essentially pump and dumping it? Yeah, it could be that. So there's reasons why it is higher and there's reasons why it's starting to go lower. So probably on Monday, if I had to guess, it'd probably go down a little bit. Maybe all week we might see a little red. It might go down to $13. So essentially what NIO did was it issued new shares. And when you look at this, you might say, oh wow, issuing new shares sounds good. Technically, it is not. You could argue it two ways. Typically, when a company issues more shares, it's called diluting their shares, and it's typically a bad thing. Long term, it could be good, but I don't know. I'm starting to get a little concerned with NIO. I've got big high expectations for NIO. I think they're going to succeed and eventually hit the $50 billion market cap. Um, but then I read things like this and it doesn't look very good. I'm actually very concerned. I'm not sure if I want to take my profits and run. I'm going to have to think about this quite a bit. So essentially, the company said they issued 75 million new shares to raise 1.5 billion. And raising money when you're a company is a good thing. It allows you to expand, it allows you to do more things, keep the company running. But when shares get diluted, companies issue more shares, it it means they're struggling typically. Um, so what happens is they issue more shares and it brings down the price of the company. The shares get less valuable because more investors are bought in, and it's just a bad thing. So let me read you the definition of dilution from investopia.com. So dilution, also known as stock or equity dilution, occurs when a company issues new stock, which results in a decrease of an existing stockholder's ownership percentage of that company. Stock dilution can also occur when holders of stock options, such as company employees or holders of other optionable securities, exercise their options. When the number of shares outstanding increases, each existing stockholder owns a smaller or diluted percentage of the company, making each share less valuable. So that last sentence there, forget all the beginning part, it's that last sentence. Each share is less valuable, and that sucks for you and I and anyone else who owns NIO stock. Um, it's really concerning because they raised about $1 billion before, earlier a couple months ago, and now they're diluting their shares. So this is so again, I have high hopes for NIO. I think they're doing a great job. I like their CEO, but before they got investment for $1 billion, and then that resulted in essentially China owning 75.9% of the company. Investors, China, essentially. I'm not going to dig into that, so it's technically wrong what I'm saying, but it's technically right. Um, these are not good signs. So they had to essentially get investments of $1 billion, and they gave up a lot of their company and they're going to try and buy it back, but this is not a good sign. So I want you to be aware of that. I want you to look into it, do your research, make, smart, educated, essentially guesses. That's what we're doing. But I'm going to have to think hard on this one. I am going to dig into this quite a bit. I'll probably make a bunch of other videos about it. But this is not good when a company dilutes shares. Look at other companies that are struggling. They always dilute their shares to try and stay in business in hopes that things turn around. This isn't good. They needed help a couple months ago. I thought it was more of expansion, but now they're diluting their shares. And the argument to this could be that they got $1 billion a couple months ago through their investments, the banks, and they're raising more capital, so they've got money on hand to maybe expand to Europe. Like I did a video on that. So maybe that's why they're doing it. Only time will tell with this, but you have to take it with a grain of salt and kind of be. You need to have your eyes on NIO now because it could expand like crazy and that's why they're getting money, or they're getting money because they are struggling. They're not going to be able to survive. It might pump and dump. This might be a pump and dump. We're at $18. So let's take a look. April 2020, it was $3.87. And then it shot up to $14, which is insane. You have to be cautious of why things shoot up like that. But now it jumped up another $4, which is really good. All the signs are looking bad. I'd like to know your opinions on how you feel about this, but I'm going to do some investigating. I'm going to do some more research, and I encourage you to do it also. Let me know what you think. Have fun. This video is not financial advice. Any statements made are my views and is for entertainment purposes only and should not be taken as financial advice. Do your own research before making any financial investments.